We have Kesree Jons from Frasers Property Australia. Being a global developer, Kesree, thank you so much for joining us.
Thank you, Navin, and welcome to everyone.
I mean, Frasers being a global property developer, Kesree, I thought of reaching out to you, and I think it's going to be a fruitful conversation because you guys have experience all over the world, and it would be useful for the audience to understand how we operate in Australia as opposed to the other countries. In terms of where we are at in terms of the market, where do you think Australia stands in terms of the property market as a whole, if you compare the markets of Singapore, Hong Kong, and the likes in Southeast Asia, Kesree?
Thanks, Navin. Look, what I would say about the Australian property market is that the fundamentals are right for investors to be seeking out Australia as a destination for their money. And the reason I say that is because the fundamentals are strong. You've got good population growth. Our GDP is growing. It's expected to grow at about 3.5% annually. We have unemployment below 5%, even with the pandemic going on.
Yes.
And that's probably worth talking about because Australia has done particularly well given the current environment with the pandemic. And we have exceptionally low interest rates, below 0.1%, which is driving the economy in terms of purchasers looking to purchase a property, but also investors, because of course what we're seeing is a tightening in the Australian property market, and that's forcing the rents up, and we have in most states below 1% vacancy. So a very tight property market, and that's also fueled by employment, particularly strong infrastructure spend. I believe that we're looking at around $65 billion worth of infrastructure spend over the next 10 years, and population growth in the order of 3 million people. So the long-term outlook, certainly for the Australian property market, is particularly good. When you compare that to the other countries you spoke of, Hong Kong is obviously going through some changes. They're still having issues with the virus. We are seeing a lot of strong activity from expats trying to get their money back into Australia. And that's also increasing demand for property. And similarly, we're seeing that from all countries around the world where it's a flight to a stable economy that's done well in a difficult environment, but also where the fundamentals look very good for the short and long term.
Sure. That's fantastic statistics to get to know. And I really wanted to focus on Western Australia, Queensland, and New South Wales, because as a company, you guys have a lot of experience and you know what the movements of the market is. Talking about Western Australia, I heard it's going crazy as well. So in terms of what would be the driving force to drive the market in Western Australia?
Look, it continues to be mining, and we are expecting that this boom will continue at least for the next 12 to 24 months. However, if we're looking at the forecasts for the next 10, 20 years, we are expecting to see something in the order of 1 million people moving into Western Australia to take up the jobs that will be on offer. We're also seeing defence. So the Australian government is also investing in Western Australia. So there's lots of opportunity for employment in Western Australia, and in particularly around Perth. So we expect, and I think the banks are even talking, ANZ came out the other day, and their recommendation was around 17% growth.
Wow.
So that's a substantial growth over a very short period of time. Now, the market has been subdued over the recent years, so we are seeing a slight correction in the market, but then due to the demand for property, we will start to see an increase in price. And so that's why we're seeing these projections at such a high number.
Sure. Do you think in the next 2 years, 2021 and 2022, there'll be a rise in the property market? Do you think it will be consistent for the next 2 years?
Yeah, I do. Look, if you talk to ANZ and the other banking institutions, it's 17%, and then moving on to more sort of normalised numbers around 6 to 8%. Then that's a very rosy outlook for the Perth market. What I would say about the Perth market is, with that number of people coming into the Western Australian market seeking jobs and getting a job, they're going to need a place to live. Now, with less than 1% vacancy, most projects and most properties are seeing a 0% vacancy. That's only going to further strengthen the opportunity for investors, because you're going to see growth in your rent, and you're going to see a very tight rental market. And of course, with those fundamentals comes an increasing capital price, because there simply is not enough stock on the ground for the number of jobs that will be needed and required in Western Australia. So we're seeing a lot of our customers looking at house and land packages, but you're looking at around 12 to 18, sometimes 24 months to be able to deliver a house on the ground, just simply because there are too many people looking for homes currently in the Western Australian market.
Absolutely. And in terms of the resources boom, we were talking about it briefly, but I think not only for coal and things like that, but even for resources like nickel are going to boom in the next few years, because countries are moving towards electric cars and so forth. Is that
That's
what
exactly
you see?
right.
Yeah.
So, and a lot of that is actually centered, the batteries, for example, the lithium plant, that's actually very close to where a number of our projects are, thankfully, which is in the Baldivis area. So, that means that you've got a direct node of people seeking employment and therefore wanting to live in that area. And that's, probably 20 to 40 minutes south of Perth. So it's still in the Perth city area, but you're very close to work. And of course, as you know, because Perth is a linear city, it runs along the coastline, you're within 10, 15 minutes of the beach. So not a bad lifestyle when you can go to work, have a guaranteed job, affordable house. So house and land packages for us, for example, are around that 400 to 500,000. So very affordable homes with a great lifestyle and strong employment.
Fantastic. Let's move on to the sunny Queensland.
Yes.
I know there's so many people moved into Queensland during the pandemic because of the obvious reasons. Do you think that was driving the market up in Queensland?
Yeah, definitely. Look, I think lifestyle is a big driver, but again, we've come out of a marketplace where it's actually undersupplied. Currently, if you are trying to buy a property, certainly in Brisbane, you would find it extremely difficult to have a choice. So again, the fundamentals are strong. We have a low vacancy, less than 1%. We're seeing rental growth and rents rise by 10 to 15%. This is happening over a quarter, so not even over a 12-month period. So again, from an investor's point of view, if you're lucky enough to secure a property, you're seeing low vacancy, strong rental returns. Also, what comes with a hot market is capital growth. So we are seeing quite a number of people transacting a home and making 10, 15% in fairly quick time. For those investors that are smart enough to set a portfolio right now, we have apartments, for example, at Riverlight, which is in Hamilton, close to the city, close to the airport, on the water. Again, it's a lifestyle community. So to your point, people are moving to Queensland because of the value, because we're still relatively affordable when it comes to our other East Coast neighbours in Sydney and Melbourne, but also because of the lifestyle and the climate. So, lots of people are moving up here because they get more property for their money, and they can purchase a number of properties potentially for a portfolio where they may be able to only get one or two in Sydney and Melbourne.
For sure. In terms of Queensland, which part of Queensland do you think will grow in value for the next 5 years, if you take?
Look, if you talk to the experts, anywhere along the East Coast is going to grow. But particularly, for any investor, you're going to want your three fundamentals: population, infrastructure, and employment. And most of the employment is in Southeast Queensland. So you're really going to want to centre your investment in that area. So you've got your employment, then you've got your infrastructure spend, and then you've got your population growth. And as you have already identified, we have a large number of interstate migration going on. So that's people downsizing in Sydney and Melbourne, moving up to Brisbane.
Correct. Let's talk about Sydney. What is driving the market in Sydney? I know it's going gangbusters again in Sydney. Auction rates are over 80%. So it's what are your thoughts on Sydney?
Well, again, interest rates are typically driving that market with less than 1% interest rates. That's typically driven that market to a place where, again, supply has started to become an issue in certain areas of Sydney, not all of Sydney, and certainly the Western Corridor, which is where we have a project, Ed Square. That particularly, we have seen strong growth in that corridor in particular, and I think that's largely due to the value proposition, because we're located on the train line which will go directly to the new Sydney Airport, which is an incredibly big driver for jobs and employment in that area. And our train station literally goes next stop to the airport. So great place to live and work. We have a large shopping centre there as well, so you can stay within your environment. But so apart from the supply and the demand and obviously the low interest rates, it's the capital growth. We're already seeing, and you would have heard other experts talking about substantial growth. In fact, some of the highest growth of the country over the last couple of months. So we're expecting to see that to continue.
For sure. And Western Sydney Airport is set to open in 2026.
Mm-hmm.
Do you think this will become a big drive for the next 5 years?
Oh, it already is, Navin. We're already seeing people taking the opportunity to enter the market, at an affordable price point for Sydney, arguably, because you can purchase an apartment at Ed Square, for example, around that 700,000-800,000, and you've got a great lifestyle. It's a brand new shopping centre, brand new train station. Schools are coming to the area, so it's a brand new development, and so what comes with that when it's a new community is that the prices are quite affordable because they're yet to evolve. So we're yet to see that price increase. We're just starting to see it now. The terrace homes that we are due to deliver shortly, and we're about to release another row of homes, we've already seen price growth, and that's just in the last quarter. And that's, $20,000, $30,000, $40,000. So, this isn't insignificant in terms for an investor who's looking at that property market. And we can only see that, with things probably remaining pretty much constant for the next 3 or 4 years, that we're going to see continued growth.
For sure. Regardless of the state we are in, the market is hot at the moment and it's a great time to invest. What sort of products do you think will attract the buyers in this particular market, and what would be the focus for Frasers in the next 5 years to focus on the new projects?
Look, community's integral to our brand and sustainability, and when you speak with customers, that's what's driving them. They want to be part of a community. So I think you'll continue to see from Frasers Property a large drive towards integrated developments, so where you can shop, live, dine, work, but also where community is embraced and you can share times and spaces with your friends and family. comfortably. Ease of access, being able to get around, infrastructure, it's always important. Transport's always important. It's going to continue to be, but we're finding people are definitely spending more time at home. So we're starting to see apartment living change a little bit, and so we've modified our designs to make sure that we're incorporating community spaces, so people, whilst they might live in their apartment or in their home, but they can certainly go downstairs and enjoy a much fuller life in their community with their friends and family, but also those people that live in the community. So that's something that as a business we're going to continue to focus on. Quality continues to be important to Frasers Property. That's something we focus on. We strive exceptionally hard to deliver our product with no defects. Our customers are at the heart of everything that we do, and the people that work for us. That's why we come to work every day. That's the most important thing for us.
Yeah, I mean, I always see in your products is you guys want to add more and more value to the customers, and that's what the market wants. That's what people want. So that's fantastic.
Yeah, I think what's important to highlight also is because we have the loyalty program, Prosperity. Again, we're working with you and with your customers to make sure that they can experience the opportunity to continue to invest, to share that with their friends and family. And the benefits of purchasing with Frasers Property is that ongoing commitment or advocacy by both parties means that eventually when they do go to purchase their new home, to upgrade or to buy an investment property, that there is a financial saving to them. And that only further helps them progress their property future and their property journey. So we're all about investing in our customers for life.
Absolutely. Thank you so much, Kesree. That was invaluable information and a lot of great insights into markets of Western Australia, Queensland, as well as in New South Wales. Thank you so much for joining me.
Thanks, Navin. Good luck.